Hi, welcome to the Market Alert for Wednesday, the 11th of May 2022. So one of the reports out last night was inflation has peaked. Here's what to expect in tomorrow's CPI. The market narrative may be slowly shifting towards concerns of just a recession, not the stagflation, a recession plus inflation, concerns that have dominated the market direction lately. But we'll have to wait and see, won't we, at 1:30 when this news comes out. The forecast is for 0.2 down from the previous of 1.2. This is month on month as well. So we'll wait and see if that actually happens. US consumer debt accelerates towards 16 trillion. The rate of increase in consumer debt for the fourth quarter of 2021 was also the highest seen since 2007. We all know what happened in 2008. And the main headline for last night, Fed speak saves stocks ahead of CPI scare. So this is a different opinion, but we'll find out at 1:30. Stocks climbed a wall of worry, according to the subhead news there. So let's move on, have a look at the other news. So we've got Lagarde out at 9 a.m. So we're mid-morning. An hour after the open of the cash market of the German DAX there. So she will be speaking, trying to bring the market up as well in anticipation of the US CPI numbers. Gold and silver ratio, as I mentioned earlier on in the week, would scream up after it broke the 81. It did. It went to 87, or in that area, 86.5. Is now showing a bit of a pullback there, which you'd expect after about 16 days of hammering the silver price to the downside. We'll look at that in just a moment. So here we go. We've got the Dow. Yesterday, the market down, breaking the 32,230 and rallying back up on the overnight. In the 30-minute chart, just look at this. We saw the market moving higher here. This is the classic that they're doing at the moment. So they'll move the market up. So from here up to where it met its peak at the previous day's high. Remember I mentioned that yesterday. The market moving up 687 points in yesterday morning's pre-market session for the Dow. The cash market then moving up slightly before the market was hammered, trading up to that high. And once we got to the high of the previous day, just to show that it got some strength, the market then sold off. Why does this happen? Very simple. Said it before. They bring the futures market up before the cash market opens, so that they brings up the value of the underlying stocks, and therefore they can fulfill the sell orders that they have from the institutions at a specified limit price. That's how it works. And then, of course, once they've offloaded, the market can then be brought back, and then the excuse that it was some Fed members' comments is just fine and dandy. So once they're out of the position, they can then deal with the bounce, market over sold, and crossover volume, etc. Market making its way back to the DP, and then moving back. Overnight market is currently struggling with the DP and the 50 EMA in the 30-minute chart there. In the German DAX, we can see that yesterday price is also coming back, also breaching the high of the previous day. We'll look at that in a moment. You can see also that, again, we're moving a lot higher than off yesterday's low. So what I would be inclined to do here is just to draw in on this bar alone, because we've got a low here and a high here. So at the moment we're at 78% of the range from this low to this high. The 89 and then yesterday's high would be the next upside target. If you want more fibs on the upside, draw from here to here. That's on the basis that the market continues to move to the upside, of course. Once we get to 89 here and don't quite make the previous day's high, we could see the market reverse as well. So a bit of a sideways pattern developing here. In the 30-minute chart, as I said yesterday morning, the market likes to fill the gap. It did this in the morning, and then we saw the market just continue all the way up in the 30-minute chart, driving through the DP level there, trading sideways, and then we had one last burst pre-lunch back up to the high mentioned this yesterday morning in the alert. We'll trade up to this level. It's always possible from a down day the previous day. It's to wrong foot traders who sell at the open and then they just keep moving the market to the upside. They've got to bring the market back. Once we got to this level, the market then sold off. It was a great day yesterday, as you will see from the statistics on screen. And then prices came back to the DP, became oversold, and then moved back to a sideways movement. At the moment, we're above the DP in the German DAX on the overnight, and the 50 EMA, the 20, and the 5. So fairly bullish there. Again, we've got the news highlighted here, which is Lagarde. We've got the high up here. If the market moves up to this area, it's also got to contend with the 200 MA as well. In the 5-minute chart, you will see that we had that futures move at 7 a.m. to the upside. We had a bit of a sell-off and then consolidation in the 5-minute chart after being over sold. Market came back, then we moved higher. We became overbought, and we'd already got a situation here where the market attempted to come back to 89% and then moved lower. We've got the market being oversold. You see that coming down there. We get a bounce back of 40 points before the market has to retest. This time we've got the momentum starting to shift to the upside with a divergence there. We've got demand, crossover, and then the green parabolic, and then we move up all the way through the lunchtime, 150 points. We get a bit of a move down here. Again, we become oversold. We come back 89 points. We got supply, and then the market moves to the downside. And like you saw in the 30-minute chart, this was a great day's trading, holding the market on the short side. Because of that high, the market traded back to the high, did what it needed to do. When it came back the second time, it showed a lack of momentum on the upside as well. In the currencies for yesterday, if I can find them, we can see that the GBP JPY is still sitting in a sideways range, trading at the 89 and 78% retracement. 50 EMA is lending support at the moment as well. Yesterday saw the market being overbought in the 30-minute, trading up to the BRN within a whisker of the 200 MA, and then switching to the downside back to Monday's low. And then the market just traded sideways as the Dow sold off during the afternoon. Just a very choppy session there. But overnight, the market showing again that it's made an extreme in the stochastics, got the demand and the buying coming into the market. Market's moved up. It's now become overbought and sitting at the DP area there. In the pound, this is still sideways and remains sideways at the moment. We've got demand. We're over sold on the downside. The momentum switching a bit there, but it needs more than that to actually move it. Very quiet day yesterday. Again, we were in this situation of being overbought with the momentum dropping. Got your divergence there, turning back to red, market down. Then you've got your bounce, very similar to what we saw in the DAX, and then the market back to the BRN there. And then just sideways, but it's stuck in a range there, as you can see at the moment. Obviously waiting for further interest rate news before moving or making its next move. And in the precious metal as well, silver's just been hammered, hasn't it, for the last, I don't know how many days we've got. We've got one green bar there where we've had an up day, closing above the 5-bar moving average. So what have we got? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 straight days there, and then 1, 2, 3, 4 down to the current low of yesterday, which is, I'll just grab that for you, we can have a look, 21.15. I still think $20 is the downside target for this market. If we look at the weekly chart, you'll see we're just approaching 21.39.5. And if we go to the monthly charts, for me it's got to be down at the $20 area, which is around this area here. So that's where I'm looking at the moment. We're just drawing some fib retracements on this monthly chart. You'll see we're between the 50% there, and the 62, 19, 18 is quite possible. It is more than possible. And in particular today, if the inflation numbers aren't there, then gold and silver will be hammered to the downside. Gold at the moment showing some support at the 200 MA that we looked at yesterday and trying to hold at this level. But like I say, if the inflation numbers come out and it's less than 0.2, way down from the 1.2, then you can expect the metals to be hammered, because the inflation threat is starting to move away, and inflation, of course, is, or rather the metals are used as a hedge against inflation, particularly gold, whereas silver has two components of both industrial and monetary. In the dollar, this showing a bit of weakness at the moment of that 103. With a bit of luck, this 103 area that we've seen in the monthly chart of the dollar will be the top for this, so it'll give the metal some support, as we see there with silver in the 30-minute chart there, finding a bit of support overnight and coming back at the moment. But again, it's all down to the inflation numbers today. Crude oil hammered for the last couple of days, but huge demand yesterday, as you can see there, bringing the price back above $100 a barrel as well. Nice retracement there as well, ready for another move to the upside. And that's it. I can't think of anything else that we need to cover at this time. So with that, I will conclude and wait for these inflation numbers at lunchtime. Okay, that's it for this one. As ever, thanks for watching. See you in the next.